So what else could be holding up the U.S. economy at this point? Well, what else? It's the U.S. consumer. So let's see, based on some charts, how the U.S. consumer is doing. You can see how the retail holders index, look at the move it made. It's a phenomenal move. And so I would say this, from the February low to the April high, this is the part of the chart that leads me to the conclusion that the consumer took over for where stimulus left off. So more money is getting into the system. People feel better about their jobs. Whatever it is, they feel like they have more money to spend. That's why this chart looks so good. Looked so good. That's a past tense reference. Okay, why? Because it looks like, as fantastic as this chart looks, it looks to me as though we can make the case that the low in March of 09 to the high in April of 10 is done. This is a completed up leg. Now, maybe in a much larger bull market that will continue after a pullback, but I'll have to tell you that there's a pullback that is probably coming, and the reason why I think that is because momentum has rolled over in a big way. It's very overbought, the retail holder, and it deserves a rest. Even so, even to the 10-day to the 50-day moving average, which right now is at 101.30 from the close at 103.50. So you have 2.5% just to get to the sharply rising 50-day. Now, this angle of ascent on the 50-day is very bullish and very supportive. So it wouldn't surprise me if the GDX, the RTH came down to the 50-day and held and tried to bounce. If it doesn't bounce, then it's coming down to the trend line. And that trend line is at 96.77. So 96.77 from where we closed on Friday is roughly 7%, which seems to me to be very reasonable. 7% off of where we closed Friday, but the high was what, almost 108. So 97 divided by 108 gets me to an 11% decline from the high to the trend line. And that's very reasonable. And you can see where the 200-day is. You can see where the prior support is. So there are a lot of reasons why retail will take a breather here, along with everything else. And so the basic materials are telling us that demand for intermediate term goods is really probably tapering off, really cooling off. And now the consumer's a little worn out as well, and the consumer could be taking a breather. Okay, so what about the components of the U.S. that make up this index? All right, let's take a look at Walmart. All right, now Walmart doesn't even look like the RTH. It looks much worse than the RTH, or much more vulnerable, I should say, to a correction. It did make a series of higher lows and higher highs going back to January of 2009, but momentum has had a problem. Momentum basically peaked in here, and then price made a new high. You have a divergence now, and Walmart has been diffusing the divergence, we should say, from going from 56 and change down to 53 and change, but it looks like it has further to go. Key support in Walmart, I would say, here's the 50-day moving average at 53.15, and then below that 52.70. But Walmart definitely looks like it's being challenged now and probably has lower to go. So Walmart, being the great American shopping juggernaut, is definitely tired, and it's unwinding that tiredness technically as it recedes back to test key support, probably around 52.50. So if it goes to 52.50, which isn't all that much from here, we're talking about another 2 1/3% or so on Walmart. But what about some of the others? All right, let's go over to Amazon, everybody's favorite destination on the internet. Well, this is a magnificent chart, phenomenal up move, but it too has some problems, right? Especially for momentum. So momentum peaked back in here, Amazon makes a new high, momentum doesn't. Have a divergence. That's a warning sign that time for a rest. And sure enough, it is resting. Okay, so where are we resting from? 151.5. We closed at, or we got down to 141.5. It looks like it has further to go somewhere, I would say, into the 135, 133 area. And if it breaks, then it's going down into the 120 area. Amazon has a much stronger chart than Walmart in general, but it too looks like it's completed something and has set up a divergence that has yet to work itself out completely. So consumption on the net, as opposed to consumptions in the brick and mortar sector, consumption on the net is also into a correction, and that correction is not over yet. Another example of why, or another reason or justification why the bond market could be doing what it is doing, and that is climbing, and yields on the long end look like they want to go down. All right, so let's do one more thing. How about Home Depot, which is another phenomenal story? Now look at this chart. Home Depot, really, if you didn't know better, you would think that Home Depot is just, it's going to continue going up. Now the difference between Home Depot and some of the other charts we've looked at in the retail home building type of sector is that it confirmed, its momentum confirmed its peak last week. And so Home Depot is having a correction, but probably will come back up and retest that high, if not make new highs, before it tops out. Now, why would Home Depot be doing so much better than, say, an Amazon, or look qualitatively better than an Amazon or a Walmart? I don't know. Maybe it's the home improvement sector. The housing sector certainly has gone berserk, and the street has gotten behind it. There have been upgrades. Home Depot has gotten the benefit of that, so I can make all sorts of excuses. But I can also tell you this, that it was so overbought up here at nearly 90 on the daily RSI that it deserves a rest. The first resting point would be about 34. So it closed at 35.23. So that's 3.5% lower. And if it breaks, it'll probably, that trend line, it'll probably come down into here and test the sharply rising 50-day MA, which is at, say, 33. So there is room for Home Depot to pull back for sure. And it will rest. Now, it has a much better qualitative look than the other charts in the retail sector, but it too needs a rest. So it's just another example of the consumer sector perhaps not supporting growth in quite the way it has in since February. Okay, and so let's take just a couple of real quick ones. Okay, let's go over to some of the the department stores. J.C. Penney. J.C. Penney, it doesn't look so good to me. J.C. Penney peaked in October, and the rally off of the February low couldn't make it to a new high. So J.C. Penney is telling me that the department store, this department store, for whatever reason, it might be indigenous to the company, it may be part of the shopping department store type of situation where consumers will start to pull back. It doesn't look good, and notice that it broke its 50 and its 200-day moving average last week, and in fact on Friday. So there's a big gap down here, and